Good morning, everybody. Welcome to the Flow Show. What a bonkers end to the week it was last week. Absolutely crazy stuff, which we'll talk about shortly, of course. Find out what's going on and what's coming next. Morning, Kay.
Good morning, Ryan. Welcome to March. Good morning, everybody. We are March.
New month, same shit.
Eh?
New month, same shit.
But we are marching on, Ryan.
Yeah, absolutely. Well, some of us are anyway. Don't know what's going on over in the States. But,
Yeah.
Bonkers stuff. But that's Trump for you. We knew it was going to be a lively one. And here we are, second month in pretty much. And it's already kicking off. Right, let's go. Let's get into it. Start off over in Japan. We've had Ministry of Finance's Nomura saying that weaker yen is a matter of inflation for Japan via higher import costs. Says high yields are negative as they raise debt service costs. No shit, Sherlock there. Hearing positive signs from firms on pay talks. So that will be good news for them. We've had a ton of data out this morning and overnight. Had more PMI data coming out. China, we've had both sets of Chinese data coming out. This is the Chinese Stats Bureau, so the official PMI data from them, showing manufacturing improving to 50.2 and services improving to 50.4. So that manufacturing going back into expansion there. Australia seeing an uplift of 2 pips to their manufacturing PMI as well, 50.4. Over in Japan, also a little improvement there to 49, still in contraction, but only a pip away from that now. And there's the private Caixin Bank survey PMI, also up 50.8 from 50.4 expected and 50.1. So a little bit of economic relief for manufacturing over there in China. Could obviously be just a bit of a bounce on front running tariffs and whatnot. Spain, they've been posting some decent data recently, but a little bit backwards there. They were expected a rise to 51.3, but they went into contraction 49.7 in their manufacturing. Swiss PMI there as well, still in contraction, but a bit of an improvement. Italy, again, still negative, but up. France, same thing, a little bit higher than the original flash number. So these are the final readings. The flash was 45.5, came a little bit hotter, still up on last month though, 45. Germany as well, a little bit of an improvement over the flash number, up on last month, still negative. You can see there's some of the others, Norway as well. Eurozone, the pan-Eurozone number, same sort of thing, a little bit of an improvement, still negative. Then we come over to the UK and much the same story. It was down on last month, but it's improved over the flash number, but still negative overall. We've got some mortgage and lending data from the UK as well. Mortgage approvals beating expectations, give or take. Some had it around 66, others had it around 66.5. So there or thereabouts. The prior month got revised down just a slight amount there. Mortgage lending overall, though, was up 4.21 billion from 3.34 billion prior. These are January numbers, so you would expect a bit of a boost. Everyone coming off the new year, coming off Christmas. No one really moves out at Christmas. And so there's probably a bit of a new year pickup as we tend to see in housing markets there. Overall consumer credit, that came in 1.74 billion, higher than the 1.062 billion. Now, as you know, I like to look at the split of that, see how much is going on the plastic. There was a big jump. 1.1 billion of that 1.7 billion went on credit card use. That was up from 400 million in the month before, which on paper potentially looks like bad news, everyone jumping on the plastic. But if you follow what happened in retail sales, we had a crap November, a crap December, and then a decent bounce in January. January also being a long pay month, i.e. the amount of time between when people get paid around Christmas, stretching it all the way out to the end of January. So potentially some factors in there for that big jump in credit card spending. We'll have to wait and see what happens next month. I'm not waving any yellow flags over that just yet, but one to definitely keep an eye on there. Kay, anything in all that, any of that data that you need to comment on?
Not really, Ryan. The situation now on geopolitics is probably going to overshadow all those data that we just saw come out. So yeah, I agree with you on the UK regarding that spending and stuff. This is something to keep an eye on, but not to overreact to, unless we see several months where those plastic expenses are like pushed and pushed. That could spell a bit of trouble ahead. But no, so far, I don't think the market has reacted too much to it. We also see those manufacturing data, but as already commented so often, services are probably the bigger part to look at. We know that the manufacturing sector pan Europe is still not doing well. It's actually we could say it's perhaps a bit of encouraging that it doesn't deteriorate anymore.
Yeah, absolutely. Although for that UK report, there were some very, very steep job losses in that and higher price gains as well. So still inflationary pressure, job losses. But on the flip side to that, this is the manufacturing data, which is only a small 13-15% part of GDP. So it is a small sector in terms of overall economics. But if that translates into services, the much bigger one, and we see higher job losses, then perhaps we will start seeing people push to use the credit card a bit more if they're not getting paid or out of a job. That's always a tightrope to be walked.
Yeah.
Right, let's move on. Few bits and pieces, comments out from Europe. We had Italy's economy minister, Giorgetti, saying that the EU continent is seeing recession in some major countries and it needs more accommodative monetary policy. So he's pushing for rate cuts. And remember, most ECB members are telling us that they don't see any sort of recessions coming. He's got a different view. He says that defence spending also has a spillover in terms of economic growth, and we need to take that into account. So already getting the excuses ready. And a little comment on tariffs. He says that their government is ready to assess changes to its digital service tax to appease US tariff policy. So Italy is, remember, they're all a block, but they've all got individual bits and pieces on with the US as well. It looks like Italy's trying to avoid potential tariffs. On Friday, French President Macron was in Washington and he said, "I left with very little hope on progress regarding tariffs." So that side of things doesn't look too good. Coming back to data last week on Friday from the US and whatnot, we had the PCE data coming out, all pretty much bang on the money. PCE year on year 2.5 as expected. The core number, if I can find it, where is it? My eyesight's going. There we go. Bang on the money as expected, 2.6%. Both seeing declines as expected and the right amounts, which not really a surprise given how people were extrapolating the PPI data and those components that fed it into PCE. Amongst that data was income and spending, and a little bit one up, one down. Income showing a nice, decent gain at 0.9%, although spending came down 0.2%. So real personal spending coming down 0.5%. So again, maybe just a little bit of a wobble on the consumer side of things that we need to keep an eye on moving forward. Wholesale inventories also had a decent jump, 0.7%. Again, potential front running there. Retail inventories stripping out cars also seeing a jump there. That's all part of the trade data, which saw the deficit in the goods trade balance widening quite a chunk. Again, this might just be all the tariff front running and whatnot. So we'll see how that washes out. Canada posted some decent GDP numbers on the month. They came in at 0.2. Q4 data, their annualized quarter-on-quarter number, posting 2.6%, well above the 1.9% expected. So decent end to the year for Canada. That's got the Canadian swaps market seeing now 49% of a rate cut from the BOC in March. That's down from 53% before that data. And on the US data, the market's still looking at a June rate cut for the Fed. We're up to around 68 basis points of cuts this year, which is getting on towards 3 cuts, sort of bang in the middle between 2 and 3 cuts right now. Right, let's get into the heavy stuff. Oh, I need a whole page on politics these days. Right, well, China, they reiterated their companionship with Russia, saying that their China's foreign minister, in a meeting with his Russian counterpart, Shoigu, said China-Russia relations will remain rock solid and unshakable. I'm going to start with all the tariff stuff because we've got the looming deadline happening. Rubio of the State Department, he expressed appreciation for Mexico's actions to secure our common border. He said both parties suggested implementation of a timetable and touchbacks to target clear goals and sustainable results. Long story short, they seem to be getting on fine in terms of getting something cobbled together ahead of the deadline. Mexico has been talking about apparently going to open these new tariffs on China to avoid Trump duties. US Treasury Secretary Bessent says he doesn't know a path for reciprocal tariffs. What he wants is Canada and Mexico to match US tariffs on China. There was also an FT piece overnight saying that these first round tariffs may not be as high as the 25% that was first touted. This is all going to go into the mix for this deadline tomorrow. Trump is now looking at lumber tariffs over all the imports of wood into the country, and Brazil, Germany and Canada are front and centre of that lot. So keep an eye on those currencies again. France had the S&P looking at their ratings and they got moved to negative from stable, though they kept their AA- rating. Right, Trump's job cutting again. He's cutting 1,700 employees at the Consumer Financial Protection Bureau, whatever that is, but there's 700 people getting booted on that. Right, before we get stuck into all the Ukraine headlines, Kay, we got this tariff deadline propping up. Mexico still seems to have its nose in front on potentially getting a deal. Canada, still a coin toss. China, looks like it's getting slapped, whatever happens.
Yeah. Yeah, that's about the situation, I guess. It's interesting. Well, I mean, the press is guessing, right, to what could happen, whether they are going to get slapped straight away, to what extent. But we're getting different sounds from Besant versus others. So I think some of the guesswork saying that Trump doesn't really know yet the final number of tariffs that he will slap on Canada, Mexico, China is probably true. Yeah, China is likely going to be a done thing, but then I'm still in doubt because for how long? And because we may not have a response from China straight away because they are entering their two sessions this week, and it may be that G is just too busy with those NPC and other meetings to respond straight away or to have that famous call with Trump, which he hasn't had yet. But on the side of Mexico and Canada, I wouldn't be surprised if we see a minor slap and getting sent to start of April when all those reciprocal tariff calculations should be done by then. So that is still an open question, I think. So yes, nothing's done until it's done.
Yeah, and they have said. I mean, we had I don't know if it was our old mate Hugh at the Global Times. He's saying that they are preparing a response to any tariffs that go on tomorrow. So they may move faster than expected.
Mm.
Yeah, G's got this week's MPC stuff where it's said he's going to, highlight some stimulus plans or things like that. I wouldn't rule out maybe getting the expected rate cuts, RRR cuts that they've touted for Q1 this year. They were doing that late last year. Maybe we get a follow up after Z where we get some rate cuts. I don't know, but I think that's a potential risk we have to keep an eye on.
Yeah, they would have perhaps a double reason. The one is the trade situation external, but also they are planning to go really big on their internal economy, and that may mean more cuts. So yeah, there is a case for them cutting right after the those meetings. I I would be surprised they do it through the meetings, but
Yeah.
PBOC will probably wait for instructions to go ahead.
Yeah. So if you're trading things like Aussie dollar, Kiwi, keep an eye on that because that usually elicits a response. It's never usually long, maybe 30, 40, 50 pip quick move if that happens. But just bear that in mind over the days ahead. If you've got stops in and stuff overnight, you might want to think about making some adjustments so you don't get caught out with a quick move and reverse on that. Right, let's get into it then. So the shit show that happened on Friday. So it all started off tickety boo and looking good. Trump said we have something that's a very fair deal, talking about the minerals deal with Ukraine. Says the Ukraine deal was a big commitment from the US and that he also had good discussions with Russia and have started the confines of a deal, saying that once a deal is done, it's over. Russia won't want to return. Zelensky, he was hopeful as well. He said this document will be a step forward for Ukraine and he wants to discuss what the US is ready to do. Which seemed to be the sticking point, what the US is ready to do, because not long after that, he said the minerals deal is not enough. The details of the deal is not enough, which got Trump saying that you either make a deal or we are out. Then that led to the whole big blow up, public blow up that we all saw. If you haven't seen it, go and Google it between Vance and Trump and Zelensky. It went into a right shit show. That got Trump on the old truth bomb, saying Zelensky is not ready for peace. He disrespected the US in its cherished Oval Office. He can come back when he's ready for peace. And then Zelensky had stormed out and he disappeared and ended up over here in the UK. Now, overnight, last night, there was a comment saying that he's ready to sign a minerals deal and expects the US to be ready too. And he expresses confidence in a continued strong US-Ukraine relations. So maybe something is back on. In the meanwhile, finally, two people actually in Europe have finally stood up and decided that they need to start doing something. It's only 3 years too late. And those two are Starmer and our old mate Macron, who's never far from sticking his oar in. They are now leading the peace deal brigade from the European side. One of the ideas apparently being touted by those two is a 1 month truce in Ukraine. Obviously, the Kremlin couldn't keep their comments out of things. They said on Zelensky's remarks about not ceding territory to Russia that it shows an unwillingness to accept the reality on the ground. If Russian assets are given to Kiev, there will be grave legal consequences. Note the term legal consequences, which is a bit of a step down in rhetoric for what's going on over there at the moment. So, Kay, we've been up and down all over. We saw Risk getting a beating on Friday on that bust up with Zelensky and Trump, which effectively the market saw as the US pulling back from the whole situation. Europe's picked up the baton. The door's still open, it seems, from Zelensky's side into things there. So no surprise to see Risk a bit better this morning. Pretty much back, almost back where we started. But what happens now? Are they going to get a deal done, or is the US done with it all?
Good question. The fact that Zelensky doesn't shut the door is one positive. The problem after Friday, if you look at it from the side of deal making and market positivity, is that Trump and his administration may be tempted to really go into deeper negotiations with straight with Russia and after the weekend and Zelensky's visit to Europe. Is it not first of all going to create a bigger divide between the bigger blocs, and that is the risk that we need to look at, for which we don't have an answer yet. But if Trump turns around and says, "Oh, I've seen Zelensky's comments," he's welcome. Perhaps not for a revisit to Washington, but like having a Zoom meeting, and we can still sign everything electronically or so. It may not be completely over. So the issue is that it was a big setback on Friday. And that is reality. The expectations were for Zelensky to sign. How it went? Okay, when there was the press briefing, it was really very bad. But it already started, at Zelensky's arrival when Trump just told him like, told the press actually, or the photographers, he told them like, oh look, he's dressed up, but that was already a bit of a naughty one, and that set the tone for all the rest. No, it's a bit of an open question. I sincerely hope that they can come to some sort of an agreement, but an agreement which would then implicate all the different parties as well, US, Europe, Ukraine, as Russia, and we know that China won't be far away, because there's a lot going on. They don't omit an opportunity to reaffirm their friendship with Ukraine. So at one stage they are going to come into the party as well, and it is. We have been saying that on every show now. The situation is still fluid, in my opinion. I'm not a military expert or knowing what's going on, but the only thing we see is that there is no truce yet on the ground. They are still sending all kinds of stuff across the border. So until that stops, there is hope. Is still only hope.
Yeah, I agree with that. And one thing I would say, I don't think Trump's going to give it up that easily, because he basically, one of his big campaign pledges was to end the war. So he's not. I don't think he's going to take this episode as a I'm done, I'm out, because then he potentially gives up the potential win if one happens. And politically, he's not going to do that. But it's right that finally someone in Europe is actually pulling their fucking fingers out and doing something. They've had 3 years to do it and they've done nothing. And, you know, Starmer would love nothing better than to get that win and take it home. And we know Macron likes to have his finger in every pie he can. Same thing, he's on his way out. He hasn't got good approval ratings and whatnot. So he'll be happy to put that one under his belt before he goes. But this was always going to happen. We said it last week. There's always going to be ups and downs. They've started talking. It's not going to be in a straight line. And here we are having one of the big negatives over it. So I think from here, I'd have to side with the fact that we may get better comments, more positive comments.
You know what?
On Friday.
You know what a very, very big sign would be, positive sign would be, and that's not a political comment. Well, it is in a way, but after Friday, what would be a very, very big positive sign coming from Trump is that in the next meeting there is no JD Vance. Because he is just human. I'm just noting he's a real bully after his comments in Munich, after his comments in Brussels. So the one was for the Allies, the other one was for NATO, and now with Zelensky, he's a real bully, right? I mean, and that would be, and I think psychologically for everybody as well, that would be one huge step psychologically that Trump would take if for the next meeting JD Vance is not there. But you know, I mean, he's the one, and Trump commented completely his way, right? Vance's way. So far,
Yeah.
But I think that would be a very big change.
Yeah, and or even Vance doing a U-turn and sounding a bit more diplomatic. But
that's utopia.
Yeah, that's one thing. At least we seem to be getting the cut of these guys' jib, you know, finding out what their temperaments are. I think it was Besant who was saying that he had a similar type of argument with Zelensky in Kiev when he went over. So he's another one that's, I don't know. Let's not get too bogged down in the politics of it, but we're getting to know the characters now, and that's more important for the trading aspect of things. Right, so done half an hour already. We haven't even, and we're still doing the headlines. So they're pretty much over, unless you've got anything else, Kay, to add to the cascade.
Thanks, but no thanks.
Good. Right. What I am going to do is take a quick butchers as what's going on this week, because aside from tariffs, wars, and everything else going on, we have a big week of data to take care of. We've had all the final manufacturing PMIs so far today, Europe and the globe, and we get the US ones later on as well, including the ISM manufacturing. And obviously it is jobs week as well. So we've got the NFP on Friday to take care of. 2, RBA minutes. I'm not sure they're going to offer too much that we don't know already, but just maybe keep an eye on those to see whether they are closer to another cut than perhaps they've told us previously. A bit of data for them, retail sales as well. On Wednesday, get some more finals and Q4 GDP numbers, and then we get all the services PMI finals and fresh ones from some of the countries. So keep an eye on that. ADP, the appetizer for the NFP, out on Wednesday too, and the ISM coming as well. So that'll be a big one to watch, particularly obviously the employment components going on there. Are we seeing a bit of a slowdown in the US, and is it going to affect jobs? Challenger layoffs. Now, this is another one. I'm not sure whether that's going to pick up on the government layoffs thing, because it's mainly, I believe, private firms, so we may not see anything in that. Then it's ECB day. Cut expected, another 25 pips. I don't think there's any reason why we don't get a cut. For me, the bum fight again is going to be on how many more is going to come after that. Have the Hawks had enough giving concessions to the Doves? Are they going to push back on future cuts, and more so the language around future cuts and restrictiveness and whatnot? Or are they going to indicate they're going to do more? What are your thoughts for the ECB, Kay?
Well, all economists think it's a done thing, so I guess we have to go with it. Will it change a lot? I'm not sure. Because we said it straight away that you know what, it may come over as perhaps a more hawkish cut, saying that they are now, well, they're always data dependent. They've all been saying we don't know what's going to happen on the tariff, so we need to monitor that. Yeah, I said it may have been possible for them not to cut impulse now, but yeah, it seems that I'm the only one in the world thinking that. But I don't think it's going to change much for us because it's baked in. A cut would or should at least be completely baked in, and as you say, it's going to be important to know what they will say afterwards. I would argue that perhaps the bigger ones this week will be the ISM, and then afterwards the jobs report,
Yeah.
because well, I mean it's still the January, yeah, the NFPs still January, right? Or is it
Yeah.
February?
No, it's February. February.
It's February, so that should give us a pretty decent indication about how companies are looking at it. We should see those government cuts start to come in, but I'm not sure whether it's going to be in this number either. But yeah, I mean ECB. I've got little expectations of a big move because the market is clearly watching other stuff and it's already expecting that cut, right?
Yeah, and I think much like we've seen the last couple of weeks, these data points are just going to become snapshot price moves rather than anything big and long lasting, given all the geopolitics going on. So treat them as such. Moves might last 10, 15, 20 minutes, and then we're back to trading the politics and everything. So I think that's still the case. And I suppose maybe the most important thing out the ECB is whether we get De Guindos speaking this month. Going to have to look at that Cauchy market, I think, getting something up for that one. That's always a bit of fun. Right, so that's the week coming up. Boink, get rid of that. Right, what's going on? I'm on Dolomex, so I might as well stay there. Kay, you still jobbing this around?
Yes, sir.
Good, good. I had a little bit back to my short overnight, 2053s. It's been a good player, sort of playing the 2050s, 2040s, jobbing it around those numbers. I think for this one, obviously, where we are now, and that Mexico is potentially looking more positive in terms of getting a deal. Obviously, the big price risk now is if they don't. So if there was any sort of no deal headlines from the US or Mexico and tariffs are going on, this is at risk of having a decent pop. Maybe 2080s, maybe 21s. Wouldn't rule it out because you know how much this likes to move on such headlines. So potentially big spike move. I mean, I probably would still look at keeping the shorts if we got that, because this 2080 is still a big old level. We haven't managed to get above it and hold above it for any real length of time. So I wouldn't say I've got my stops well out the way. They're well above 22 at the moment, just to keep out of any noise. So I'd still be able to place on the short side, even on the potential no deal, because it'll be still closer, I think, to getting one than anywhere else. If we do get a deal confirmed, I'm going to be a bit cautious on the downside. I'm not expecting to see anything sub 20 maybe on this, because the market has, it's not moved an awful lot. It thinks there's a deal coming. So a confirmation move, I would be concerned if we didn't break through this area here, 2010-09 and 2018-19-20. So if we don't get through there on a deal headline, I'll be chucking out my shorts as quick as I can hit the button. Do you think we can do any better on that, Kay, or are we only
Yes,
likely to see?
yes, because I think the market Some deal, yes, but it's not going to be a great deal. I think that's what the market is, where the market is at, and still migration, still the fentanyl thing. That's still what's overhanging right now. I think if there's a deal which is not too bad for Mexico, this thing dumps under 20. That I think so. Um, so I'm slightly more aggressive perhaps on the downside. Top side, yeah, 2080, 21. Having traded it around, same as you do, I'm all right with anything to the top side for as long as it doesn't break above 21. For the rest, but I'm slightly more aggressive to the downside if they get a decent deal, because then I think we are going to drop below 20, and I may add again to. I think we've got to look at waves. You've got
Yeah.
a wave down to 20, 2020, then perhaps a bounce even to where we are once the dust settles, and then a more aggressive move. I'd rather wait for a second wave move to start than selling into the hole on a first big reaction, which we will have, because it's still an emerging market currency, and you have less liquidity than in stuff like euro or cable or Swiss or whatever. So that
Yeah.
is, I think, yes, we are going to have a big move. Um, voilà, that's it.
Yeah, I think if we get if it's a deal, but it's a more all-encompassing deal, like if it touches on some of the trade stuff that's coming in, that's coming in the reciprocal tariff, tariffs part two or whatever, rather than this tariff part one, then I think we might get a bigger move south, if it answers some of those questions. But yeah, well, let's wait and see what comes first. If it's a deal, that's the first thing that will be positive for us, and then after that, we worry about what comes next from there. Dollar CAD is obviously in the framework CAD in general. We've had this move up. It did test the top of the zone in the end, up at that old 144, 60, 70 area. Just managed a little nudge through. We're back below. This 1K, I think, because it's such a coin toss, deal, no deal, punt, deadline, punt, whatever. I'm not too keen on trading this one. We could be 146, 147, or we could be 141 again, depending on what the headline is. I think this is a time where you've got to have less faith in the text until you get the headlines and know what you're talking about,
Yeah.
before you rely on the text again.
Yeah, and you know what? It could be a longer story as well, because Trudeau is on his way out, and who is going to replace him? And will the story then start again? And yeah, I'm with you. I mean, the proof is I have no positions in Canada. We are on interesting levels. I mean, there are interesting levels. We are on one not too far from where we are here, around 144 and a half, 60, 70. Then there's another one around 145 and a half on the top side. Um, but um, and on the downside, it's relatively, I wouldn't say simple, but yeah, if we start to break back below that 142.70, that means that the deal is much better for Canada than may have been feared.
Yeah, absolutely, mate.
Well, if it's yeah, a little bit less tariffs, but the story isn't done. I think we could retest at 142.70, but I wouldn't be surprised if it holds.
Yeah, exactly. There's still two positive outcomes for Canada versus one negative. The one negative is no deal. The two positives are a deal, which is obviously the best outcome, and the second lesser positive is if they get a can kick on the deadline, and it gets shoved out. So yeah, on balance, I think 2-to-1 ratio that the news might be good, but I'll wait and see what we do actually get for that. Quick look at the euro. Friday, Sunday, it got down to that zone 103.60, the top of that zone down here that we messed around with previously. No surprise to see it holding there. We bounced back up, and have a guess where we're going to be testing resistance 104.50, that level that we had support, 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 support in the tests. So another zone up here. Can you see this one going all the way back up to 105? And if we get up to that 105.30k pretty quickly, are we going to break it?
I think we can. Now we're in talking about pure moves. It was a decent hold down there around the 103.60 70s. And I think we can move back up because there is a general. It could be just the start of March move, but there is a general move out of the dollar right now in various currencies. I have different moves. Yen is a bit of a strange one again because it seems to be moving with risk again rather than being a dollar move. But if you look at the euro, if you look at the cable, even Aussie and Kiwi are holding. But I think we can actually go to have a look again at 105, 105.30, and then we will see what happens there. Obviously, we are at the midpoint of that range here. Could see a bit of a stalling here, and just as the states will walk in, we will see what they want to do with their dollar, because we did have opposite moves of late. And that's about it. I'm a little long, and I think we can, but I'm trading it around like I usually do,
Yeah.
to reduce risk as soon as possible. But I've been flirting with this idea that we may be not too far from an inflection point in the dollar. So I'm probably going to trade it that way for a while. Obviously, still being psychologically having difficulties to be a real euro bull. It's rather a dollar move than being really euro bullish. Positions in the euro are a little less than in what they might be in cable or so.
Yeah.
Yeah.
Okay, mate. I'm going to bump it over to you for a couple.
Yeah,
Just keep an eye on dollar yen. It's up testing that 151
yeah,
again.
that's a strange one. It's really I thought this morning we may have seen a bit of a top and start to move back down again, and then risk flips around and we are back at 151. Um, we've got to watch this one. This is the weekly cloud, okay? Um, and it's a very thin one, right? And that is usually, when we have bigger clouds here, it's less. One can less read it easily because there's a bit of a thick broth that we need to chew through, especially when it's a weekly one, it's big one. But this one is a thin one, and if you look at last week's one, and I was talking about that one, it came in just in between those very decent levels that we have at 151 and 152, and it was just lying in between. This week it's come down a bit, which is logic, of course, in this move, and we are near the top here, 151 thin. But being a thin one, it it could act as a really solid top, depending on what the Japanese are doing. But also, if you break through it during the course of the week, it could also act as a bit of an accelerator for stops and stuff like that. So this to me is an interesting one. If you go on to the shorter term, obviously, this is the zone. This really is the zone between this 151 and 152 is where it is. I wouldn't call it outright decision time, but it may be decisive for a move higher if we break above that zone again. So far, so capped, and that's what I'm going to say. Um, for as long as we are below this zone here, and taking into account that yen has been a volatile mover, we can still say that we are in a relatively negative um, pattern or environment. But always be careful with the yen because the market is a bit long yen, and if those levels, successive levels, start to go, it could also go onto a bit of a ride higher. So, but in the meantime, I think it's still looking relatively bearish right now. On the cable, whoops, that is not what I wanted to do. On the cable, I've been talking about this zone there, the mid 125s in the chat room. It is to me an interesting levels. We have come down there Friday on a bit of a liquidation on the very bad situation or yeah, I mean it was bad on Friday. So we there was a bit of a liquidation here, which fortunately I didn't completely get out of my position. I re-added it again straight away. I'm a bit long on the cable, as people in the room know. And this is looking relatively okay, being back above 26, 30, 40 now. There is a potential, I think, to go and have a test back at 127. I'm going to try to defend my longs until this zone here around 125.40. This is one that I'm going to have keep a close look at because I'm thinking this zone is relatively interesting right now. And also looking at my view on the dollar, my view on the sterling, still being pretty okay. This is doing a pretty decent job now. Intermediate level here around 126.80 because before we can talk again above this about this 127 127.15. If we get a break above here, I think 128 is going to be relatively important again. But in between those, I don't have much really that comes into play. So that it may be that if cable manages to get above 127, we see a pretty decent acceleration. Um, what else was there? People. Oh yeah, Vincent in our room was asking about the metals and about Ali about gold. Um, as I said, there may be a few similarities between with this move, the gold move that we are seeing. If that's the case, then we are going to go back down to 27.90 or perhaps even low 27s. But we are starting to hold little levels here. So I think the global picture, the overall picture, still hasn't changed. I still think that gold may be one of those trades where if you see really decent setbacks, it is a possibility that we are going to trade another round of fresh highs. But we need to respect the levels. And one of those levels is going to be around 28.80, Ali. If it gets about through 28.80, then I think we can look at it a bit more constructive again for 29.20s. But for as long as that does not happen, this could be just a correction in a bit of a move lower. Personally, I'm going to watch it for a while and see what's going on. I still got my finger on the trigger to get back long, but it may have to wait a little bit. I'm just a little bit cautious with this right now. Silver, and then I'm going back to what Vincent was showing in our room, just to quickly see, yeah, 31 and a half. I don't have much myself around 31 and a half, but I have it around 31.80. If that's of any help, I think 31.80 is rather going to be the level. If we get back above there, okay, may need confirmation above 31.90, but we've been hanging around here and then did that last leg lower. But interesting is that again on Friday, that was a end of week get me out of here move, but we held around this 30, 70, 30, 90 zone. That is to me an interesting one to watch on the downside. If we start to get back below, there's probably going to be a deeper move. I know that Dale, for instance, is looking for this move back down here to load them up. But in the mean, and as I always say, one step at a time. For as long as this holds here, I think we may see a bit of a more positive environment, and having a little look back here, perhaps even a little look back into the 3230s. Long term, I'm still long, but I'm again cautious and not doing too much about it. Aussie Ali, you are trying to short around current levels. Well, okay. You can. As I said in a room, we need to get above 30, 35 to make this picture look a little more positive again. So if you're leaning against that level, that could be a possibility. I myself, I'm very small the other way, and I'm keeping this smaller. And that's where, I'm always looking at what currency could be the best when I take a position, and if I'm thinking that short dollar is a position that I want to be in, then the different currencies will see me have different positions, and this one is a very small one, but I'm the other way around, and I know the overhang of Chinese politics and stuff, but I think that with my slight bias on the dollar, I think we may have seen a little bit of a washout here again, and that we may move closer to those levels again. But on the tip of my toes in this one, because it's really um, not my favorite one, looking at what's happening in China for now. But if you lean against it, you can lean against this 30-35 or against the 45-50 in the Aussie, and then looking for another move lower. That's always possible. And I'm looking at the clock, Ryan, and I'm going to give it back to you.
Thank you very much, mate. Great stuff as always. And thank you, everyone, for coming to the show today. We wish you a great week's trading ahead. Try and stay safe through all these headlines and data and everything else. And we'll catch up with you tomorrow. Have a great